You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. You know what that music means. It's Thursday. It's noon Central. It is 1 p.m. Eastern. It is time for episode 2 of the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo. I will endeavor to be your guide. Challenging job these days through the world, the maelstrom of madness that is the options and indeed equities and volatility markets and everything else going on out there. Remember, if you like what you hear at this show, anything else we do on the network, keep those reviews coming. Keep rating and reviewing on wherever you get these programs. It really does help new folks. And as we can all see right now, the new folks need a place to turn. So keep rating and reviewing. It does help the new folks discover our stuff. And of course, keep sending those questions into, especially for a day like today, Mail Block Thursday. It really does help ease the pain, let's just say. Calm things down. See what you guys have on your brain, which I think we know what it is, but we'll get to it all together in a little bit. And let's see who else we're going to get to on the old program today. Let's go out now to the scary, the dark, the stormy, waves crashing, thunder, lightning crashing down from the heavens. You know what I'm talking about. It's the GIOVINAZZI castle, poised ever menacingly on the shores of Maine there. Perpetual night, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital, by way of a GameStop near you. Mr. Rock Lobster, welcome back to the program, sir.
It is it's actually snowing, so it's not storming. And things are going okay. I guess we got a lot of parse today because I believe some madness has been happening.
I believe some madness has been happening as well. You know, whenever there's madness afoot, it's always just feels good to go out to the quiet, the tranquil lands of St. Charles. I don't think they allow GameStop in that town. Yes, it is time for Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. In that sleepy hamlet, they don't allow crazy things like GameStop, right?
I don't know. I mean, I didn't look at the markets yesterday. It's down a little bit from 2 days ago. Did anything happen yesterday? I don't know.
Not much. Let's just keep on rolling. Let's pretend nothing to see here as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Let's get to it. Welcome to the trading block, the portion of the show we break down what the heck is trading, what is lighting up our collective tapes out there. And coming into showtime, we saw that big sell-off yesterday outside of other things. Now we're getting most of that back. So it's a day that ends in Y. AKA green on the screen, S&P up a little over 2%, about 2.1%. Dow up about 2%, NASDAQ up at 1.7%. So all those horrible concerns about the rollout of the vaccine and the pandemic that many could argue are probably justified. Let's just brush those under. Let's just keep on rallying. It's a day that ends in Y. Coming into showtime, VIX 27.75, up about 3.5 points from our last show. Hit a high of nearly 33 between our episodes, about 32.68. Over there yesterday. VVIX at about a 121, so back up to that frothy 120 plus level. That's up, about 7 points from our last show. VXX, a product you guys love to fade. Not so much this week. It's up about 19. It's up about 19, almost 19 and a half, on 1935 or 40 coming into the start of the show. It's up about 2 points from last show. Hit a high of over 20 and a quarter. In between, I should say, last show and now. And of course, VolQ, the vol of NASDAQ, at about 28. It's up 3 points from last show. They hit a high of 32.35 out there. But you know what? Forget all that. Forget indexes. Forget volatility for a second, at least in the VIX form. We got to get to the elephant in the room. We are all living in a post-GameStop, post-AMC, all this madness world out there. We got to kind of start with that. If you want a deep dive into all this goodness, check out the Options Boot Camp that just hit the network yesterday. Dan and I did a deep dive, called it Everything You Always Want to Know About Short Squeezes, but We're Afraid to Ask. We got into all of the various machinations of that. So if you want a deep dive for a full hour, I encourage you to go check out that one. But in a nutshell, of course, GameStop, ailing software/video game retailer. We talked about it on the show not that long ago. We had our Bed Bath & Beyond versus GameStop poll. Most of you chose GameStop, 88%. So I guess feather in your cap. Hopefully you held on to it from about September when we did that poll until now. And hopefully you held on to it all the way up to nearly 400. But either way, this name that has been circling the bowl made a few interesting decisions with their board. And it seemed to just set off this frenzy, particularly on this one major forum over there on Reddit. Wall Street Bets, you've all heard of it by now, had about 2 million members when all this started. It's up to about 3 million now. They ended up shutting it down. Then it opened up again. A lot of drama on that front as well. Of course, the big short trader over there, Michael Burry, he kind of kicked off the frenzy back late last year. Remember, the stock moved from about $5 to about almost 20 towards the end of the year, about 19. So it had a good run towards the end of last year as well, about 3x already. So it was you could already argue coming into this year, it was overdone and inflated. And so certainly a lot of folks did. And then this big short trader had about a 3% of his fund, I think, position in GameStop out there. He, of course, has since disavowed all of this madness. He called it insane and dangerous, this run up. And that's effectively a good description for it, because we've just seen this just madness afoot, where these bets are coming in from the Wall Street Bets and from all these smaller players. And it's taken on this interesting, I think, almost dangerous tone now, where, it's gotten this populist/political fervor to it, where you see major financial figures who probably should know better tweeting out there and putting it out there as, hey, this is us versus the man. This is Suits versus, small traders out there. And if you want to stick it to the man, you want to stick it to the short sellers, you want to stick it to everyone else, then you owe it to yourself and to your country enough to buy these ridiculously inflated stocks. And please, for the love of God, don't pay attention to nonsense like that. I have no love for short sellers. I have no love for the citadels. I think if you live by the sword, you die by the sword. And these short sellers certainly live by that sword, and now they're dying by it. So I'm not going to shed tears for them. But still, the notion that people are saying you should keep buying these inflated names at close to $400 or AMC at close to $20 as some sort of political statement or a way to stick it to the man. No one's going to backstop these trades for you. If you were up there, if you're one of these poor fools who was buying GameStop at north of $300, almost $400 last night or yesterday, no one's backstopping your losses now that it's back down to around 200. You just gave away a lot of money on pretty much an absurd flyer, a name that you could argue was overvalued hundreds of handles ago. You're buying it now for no other reason than for euphoria or momentum. So hopefully you listen to a show like this, you're a little bit more judicious in how you allocate your capital. Don't get caught up in these frenzies of doing things for the sake of some sort of political or some sort of public statement out there, sticking it to the man. It's not going to stick it to the man. It's just going to stick it to your account at the end of the day. So by all means, Ted Cruz is getting into this now. What a weird world we have where Ted Cruz and AOC see eye to eye on anything. That's what we need now. We see, of course, Yellen, everyone, Warren's chiming in on this. We kind of figured yesterday during our Options Bootcamp show that we probably had seen at least the near-term apex of the madness. We started getting reports that outlets like IB and others were starting to ban opening transactions in these names, closing only. In fact, my co-host, Mr. Passarelli, he got caught up in that during the middle of the show yesterday. He got so into some of these spreads because they were disseminating absurd quotes. Looks like you could leg into verticals for nothing. And so he was trying to do just that when the platform shut down opening sells. So that left him holding the bag on the meaty leg of that trade. So don't get caught up in this stuff, listeners. Don't allow that to happen to you. These platforms are making changes on the fly, and you owe it to yourself to be judicious out there. So that's the end of what little soapbox I have here. Don't get caught up in this. Be judicious. It's your money. You worked hard for it. Don't throw it away on some whim because some suit who has a ton of money, they don't care, and they're not participating in this, is telling you out there to go dive into this for some sort of, rabble-rousing cause here. But yeah, just madness on every level. Again, check out our full Options Bootcamp episode from yesterday if you want more. But I want to hear everyone else's thoughts on this. Let's go around the horn. We haven't had a chance to chat really with the Rock Lobster about this week. So let's start there. Mr. Rock Lobster, give me your thoughts on all this madness. What was going on from your perspective? What was going on in the world of the pitch chat? You have a usually savvier bunch over there. Were they getting caught up in all this? What was going on from the Rock Lobster's perspective over the last few days?
What was going on from my perspective? So first off, if you see quotes, okay, I'll just let everybody be clear. There is no way, that an electronic liquidity provider is going to allow you to buy a spread for a credit, okay? It ain't going to happen. Now, the possibility that you think it might happen, all of the spreads you saw basically were all just crap, right? So
yeah, the quotes for these names were nonsense, particularly AMC because they didn't have strikes above 9. So people were just the quotes were absurd. It was absurd.
So it just and I know it's hard because you see stuff on the blinky light screen and you're like, oh, this is real. No, it's not real, right? It's there, but it's not tradable, right? So you think, oh, I'm going to put something in mid market and get it, or I'm going to be able to try to get this trade. The electronic liquidity provider systems work pretty well. So if there is a spread out there that's being offered you can buy a debit spread for a credit somehow, their system is going to snap it up. They work pretty well. They've been doing electronic trading now for 20 years. But what you're seeing basically is when the markets get wide, they're giving up. They're like, there's no way we can provide any more liquidity to this. It's freaking stupid. The stocks are going up $200 a day, and it's 1,000 vol, and it's $10 wide, and good luck. So I would say it's essentially the liquidity providers just throwing in the towel because that's what it is. It's just it's madness. So so when you see stuff like that, or you see like, oh, I can liken this butterfly for a $3 credit. Like, no, you can't. Okay, you can't. It's not there. You're not going to get it. Like, somebody show me their ticket where they got an unbelievable fill, and I'll say, okay, I'm wrong. But I would guess not many listeners were able to get any of that. So as far as that goes, I think that's what the deal is. Will this stuff eventually calm down? Probably. Although I think shutting down the trading platforms, it reminds me of sort of that, when they changed the underlying for UVXY and SVXY. I'm like, what are you guys, just change the rules? Remember when they stopped allowing people to short stocks in the financial crisis because it was like easy money? Everybody like, those banks are going to zero, right? Until the government said we're going to recapitalize the banks, and they didn't go to zero anymore. So, like, you have to just keep in mind that the one thing about risk and trading is like things can change in ways that you really don't know are going to happen. So what I would say is, buyer beware like anything. But yeah, if you see stuff on the screen that's too good to be true, there has to usually be a reason around it. I think a lot of what's been happening is just there just hasn't been the liquidity hasn't been there to support that stuff.
Were your folks and were you, sounds like you were kind of up in arms when IB and others shut down opening transactions. The diehard libertarian in you, not a fan of that, sir?
I'm not a fan of that at all, to be honest. I think, the short sellers that are super smart that started, hey, we're short this, and you guys can all go blow it. To be honest, I'm glad some people finally said, you know what, smarty pants guys, if you're going to telegraph your position like this, we're going to run it up your you-know-what. So I think all's fair in love and war, and especially in the markets. So I think there'll be a lot of short seller guys that might be a little more careful next time. They tried to use their sell and dump scheme, which they've been trying to do. Like they amass a short position, then they tell everybody the company sucks, and they have the sell-off and they make money. And now all of a sudden that game might be a little tougher. So I think I kind of enjoyed watching it, to be honest. I'm like, that guy's getting drilled. And my second thought was, I'm glad it's somebody else and not me.
Exactly. The old days. We've all been run over a few times. We've had our share, maybe not to the tune of billions of dollars. And that's why I don't shed tears for these short sellers, because a lot of them, particularly like the Citron Research and others, they were out there kind of poking the bear a lot with these webinars. They were out there. The short sellers, many of them like to embody this ethos of slamming the stock, and that rubs people who are bullish obviously the wrong way. And so, a lot of them, like I said, live by the sword, you die by the sword. I'm not a big fan of brokers shutting down access to liquidity either. I don't put it quite in the same category as, changing the rules of the game with UVXY and SVXY kind of midstreams, because that's a different thing. That's a product that you purchased with a contract in good faith, that they change the terms of the contract on you midstream with no ramifications for them, no sort of recourse for you. A broker is a private entity. They can kind of do what they want, except for like the big TDs. That was obviously public, but Petterfy's played this game before. Petterfy, if there's a game he doesn't like, he's just out. He does it with VIX and other things. So that didn't surprise me as much. I don't like it, but I'm not as outraged about it as perhaps, like I said, changing the game of a contract that you purchased or traded in good faith and that they just then change the terms on. That to me is still a worse sin. But again, neither of them are good scenarios. Uncle Mike, we had a chance to chat about this on the advisor's option earlier this week. Ironically, through the magic of editing, that still hasn't hit the network yet. So you feel free to have at it again today, sir, in terms of, and obviously things have changed since the last time we chatted about all things game. What are your thoughts, and what were your clients up to? Are they hitting you up? I mean, I know your clients are usually not the slinging GameStop bunch, but were even they getting called into the madness, sir?
Yeah, one client, he's actually a listener of the show. We were talking yesterday. He said he got filled. He did get filled on a spread for GameStop for a few pennies. I mean, he didn't get filled on a debit spread for a credit. But I can't disclose what it was, but it was kind of one of those types of spreads to where it was like one strike price was $88.92, and then the next strike price was $88.89 or something along those lines. So don't know how it ended up for him or how he got if he got out of it or not. But I was on a call with him, and he said he playing it a little bit, but it was just a small amount of money and just wanting to do it just to kind of get into it. So he got filled. He didn't leg into the spread, but he got filled on a spread as a spread. But it was definitely not for a debit spread for a credit by any means. But yeah, and looking at this, one of the things that I was looking at this from a pure numbers standpoint yesterday, and this stretched me a little bit yesterday from the standpoint that my rules dictate that I got to do a bunch of stuff if the market goes negative, if the market closes negative on the year, and it didn't. We closed at above the 373.88 level on SPY, so I mean we went negative in the aftermarket for a little bit. We were negative a little bit during the market, but it was a situation where I was looking at it, and I watch the news. I don't live under a rock by any means, but the other thing that I noticed about this that really made me think was bonds were not really moving that much yesterday. Bonds went up a little bit, and we didn't have a mass rush to commodities. The money's going somewhere, and it really confirmed with me yesterday as I'm looking at this. Okay, this is obviously really a GameStop effect of what's happening, where of course the larger long-short funds have to cover their shorts on GameStop, and by doing that, all the insane margin calls that they were getting on that, of course, they have to close out some of their long positions to make room to close out their shorts or to create more money so that way they can stay in their short position on GameStop or whatever the case may be. But it definitely had the feel of a lot of forced selling in the overall market yesterday just because of that. And so what I did yesterday going into the close is I actually did a so I can sleep at night put spread in that for a couple of pennies, I actually have a short put spread, and that I've been working and have had. It expires in a couple months. I can't disclose the exact strikes, but it's one that I've had for a while. It's just kind of a basic out of the money spread that I have going. I even talked about on the strategy block a couple of weeks ago. And so what I did yesterday is I just, for a few pennies, I took a position in the opposite strikes for a put spread that expires tomorrow. And quite honestly, I lost those few pennies, but I got to say it was some of the best sleep that I ever had. It was a very worthwhile couple of pennies for me to do. So I think that with where we're at right now, that's really the main thing that's caused this big hullabaloo yesterday. And when we actually look through this, I think that just this was a situation to where you're going to have blips throughout the year of crazy things that happen. I remember we had spent a lot of time on the UVXY when that happened. We talked about that a lot in episode, I don't know, probably 700 or something like that. But this is just another situation to where there's times to get out. If you are going to get out, of course you need to manage risk. Of course you need to have a plan of when you're going to get out no matter what, because the old expression, the market can remain irrational longer than you can remain solvent. We understand that. But why is the market actually doing what it's doing? And yesterday, just after looking at all the evidence of just watching any news feed, of course, you could see it was GameStop. But what I did to look a little bit deeper on it to really confirm it to me is that if this really is some type of a panic sale that has to do with a lot of things, then why was money not rushing into other asset classes, which it was not? So, yes, I had my risk management in place, and if we would have closed below, or we'd have been closed negative on the year yesterday, or been below it with like maybe a minute to go, I likely would have gotten out of a lot of my positions. But I really did not feel that concerned from the overall short-term strength of the market because of the fact that we did not have a rush to other assets. Once again, I managed risk. I burned a few pennies, but money well spent in hindsight. That's my take on it.
Yes, a lot to unpack there. We got so into GameStop, we didn't even really talk about the broad market, and there was a lot going on, as Uncle Mike just alluded to yesterday. Also, a lot from a volatility perspective. Like I said, we saw VIX get back above the 30 handle, and a lot of people were maybe wagering it would head the other way. On our Vol Views, I know we had a few panelists who were thinking maybe shy of the 20 handle at this time tomorrow. So obviously not there. But still, Mr. Rock Lobster, let's shed GameStop for a second. I think we'll get back to it a little bit later when the question segment. But let's shed GameStop for a second. put on your Volman, your hat, and I guess take off your glasses so you can get away from the Clark Kent mode. What did Volman see in yesterday's rip-up from a vol perspective, sir?
I think yesterday we had a bigger move for sure. I think the move involved from 31 to 37 into the last 30 minutes of the day. It felt like some kind of forced closing to me, like somebody had to pound out or close some positions, so that's why the vol spiked. Because you had a pretty drastic jump in vol. I was trying desperately to sell some VXX call spreads that I own. I could not get any price. I was actually lowering my price in 25-cent ticks to try to sell some spreads. And normally I would have them offered already, but I didn't even have time to offer them. The market had moved up so fast and back so fast again. I didn't even have time to offer spreads out that I had purchased because things just moved crazy fast. I think VXX went from 20 to 22 between 3 and or 4 to 4:15 Eastern time. So I think, and back down again. I don't even know if it was there to trade, but anyway. So vol went nuts, and as it should. The market was down 2+% or something like that yesterday. And I just think liquidity is a finite thing ultimately, and I think clearing firms have clients, trading clients, and those trading clients, gosh knows what's going on. I mean, the vol's 1,000 for a reason in some of these stocks, so I'm going to assume that the liquidity providers probably aren't long it, and they're just trying to wait for the dust to settle at some point and see when all these contract dollars come back. And I think that causes a vol squeeze. I mean, because like I said, there's a limited liquidity universe. And it's the rule that applies to, if people are buying something in one strike, it jacks the vol in the month. And then that 1 month vol jack will jack the vol in the class of options. Then all of a sudden you get a lot of option classes, the vol jacked, and all of a sudden that spills to the S&P 500. And then all of a sudden they're looking for VIX futures to hedge. And then more buying comes in and all this stuff keeps. So we've been watching vol track very high above realized vol for about 2-3 weeks now, at least. Don mentioned it last week on the show, and it hadn't gone away. And there's a reason, because people were buying. There's just buyers of options, right? A liquidity provider is not going to leave vol at 24 if they're long a boatload of options, all right? It's just not going to happen. If realized vol is 10, they're not going to do that because it costs them money. So the public has been long a lot of options, probably a lot of protective options. And after this last year, they're like, man, it's a lot better just to stay long the underlying and buy some puts and see what happens, right? Instead of having to scramble too much. So, and I think that's reflected in how the liquidity providers were pricing things. They're like, screw it, we're just going to leave it real expensive. And I think that's the right thing. I thought we were going to see a bit of a vol move this morning. I still have the strangle on, trying to get out of my call spreads to sell them anyway this morning. And vol man went tipping right over the top of his surfboard. So I never got out of anything. And I'm probably going to end up closing the position for a small loss. But that's the game. But anyway, and so at least for right now, so where does this go for vol? Because we're going to go back to a 10 vol environment again, because the SPX really isn't moving that much. Yesterday, huge move. Now today we recovered quite a bit of the move. Is that a 29 VIX? I'm not sure, but no one is selling vol. So you can't vol can't go down unless people start to sell contracts. The paper comes in and sells contracts. Nobody is doing that yet. I think there's still some, people can't quite figure out what's going on with the new administration. It seems like it moved more moderate than people might have thought, but then now you got some executive orders and there's a little confusion. How big the stimulus? So there's lots of questions, and basically no one's selling juice. So for everybody that has like a vol selling program regime, like, hey, I buy puts in VXX because I know it's going to go down, or probably selling call spreads is better right now. but still risky, for sure, for sure. But I think we're kind of stuck in this like odd vol trade where even though VIX has been relatively high, the actual VIX and vol products themselves have not been a very easy trade. I did get rid of all of my March positions yesterday and this morning. So I'm not long any more March juice. It had enough of a run for me, so I sold them. But now I'm trying to look for, what's the next trade on the downside. And to be honest, I don't know. I'm going to wait a day, see what's going on. So again, a very odd time. And I think overall liquidity is kind of fractured a little bit. Like I said before, and it's going to take a while for vol to come in. I mean, how long has vol stayed in the 20s? I think we hit like a 20 vol in February, and we haven't come through it yet, and it's almost February again. So pretty long stretch at a 20 plus vol from what I can remember. It's almost getting near a year now.
At least some of those upside calls, they went out to try to help save some of those VIX puts that have been going out to die for you for a while there, Mr. Rock Lobster. Sounds like they didn't get all the juice they wanted. But that was the challenge yesterday in any vertical you had on. Look at AMC. We were talking about, Meatball was talking about that one on Monday, the 4-7 and others. But, you put those on and they worked out great, but also not as much as perhaps you might thought because all these other factors you kind of just mentioned with the VXX, even worse. With names like AMC, there were no strikes beyond 9, so this thing was trading $19-20. So you saw upside strikes. I had some small verticals in there, and you saw crazy upside strikes actually getting bid up more, certainly percentage more, than the meteor in the money calls. And so what you ended up having is this weird situations where the spreads were almost kind of widening out for a little bit as folks were just frenzying to get whatever they could at the top of that strike chain. So these are interesting times. May the old Chinese proverb / curse, may you live in interesting times. We are all living in them. And it will be interesting to see what the ramifications of this are for firms like Robinhood. It does looks like the chatter about it online is turning decidedly negative about Robinhood. People, like I said, people kind of maybe expect this from Peter Fee. That's his ship. He runs it how he wants. Robinhood was kind of built on a different ethos. They attract a lot of the same core constituency that probably hang out at a place like Wall Street Bets and others. So they probably feel a little bit more betrayed about this than perhaps the folks at IB who are, let's say, probably a little bit savvier and just maybe have more experience trading the markets. And now we see, it sounds like they're threatening hearings in Congress about this. So it sounds like we have not heard the last of this from a brokerage perspective, and certainly from a case study and everything else. This is going to go on for quite some time. I said that already about 2020 and the analysis of that. Now add to the madness of March of last year, January of 2021, and the GameStop insanity that is still unfolding as we speak. This by no means back down to $4 again. So a lot of road to run there as well as we keep on rolling. Well, let's look really quickly. There are some earnings this week. It seems almost banal to talk about these things now. Who cares about Boeing when GameStop is destroying the markets as we know them? But we had yesterday, Wednesday, we had our friends across the street, Boeing. Numbers not so good out of there. NASDAQ, Apple, Tesla, some names you might have heard of, Facebook. That's how crazy yesterday was. Nobody cared about Apple or Tesla earnings or anything else. All anybody could talk about was this sleepy, old school, outmoded, you might argue, retailer of video games trumped all of the hot names everybody talks about every day. Apple, no one talked about Apple yesterday, any of our stuff. Tesla, Facebook. I mean, obviously people who traded it paid attention, but it's just insane how all of the oxygen in the room was consumed by these heavily shorted names. That's another thing. People are telling people to dive into names where the economics is already against them. Go buy these as some sort of patriotic duty. I can go on that for a while, but we won't. Today, American Airlines, another one that's getting caught up in perhaps this short squeeze madness. 1804 right now, up $1.50 or about 9%. They topped out, looks like, at about 2033. So coming off a little bit off their upside as well. Tomorrow we got Caterpillar, Chevron, Honeywell. Let's look really quickly. We do have a move results report for Tesla and a few of those others. And Apple. Let's look at Tesla first. They went into their announcement 864.16. I still can't say that with a straight face without laughing. Then let's see. They were pricing in 8.5%. They delivered 5.5%. So yet again, another name underperforming from an earnings vol perspective. I had this chat with Matt on the Advisors Option Show earlier this week. I just heard through the grapevine, he may be joining us on Twiphone a little bit, so we'll get to talk more, I think, about all this good stuff on the vol front with him in a little bit. But yeah, I thought maybe we're hitting that inflection point. He didn't seem to agree, and maybe these numbers are bearing him out. Apple 142.06 going into their announcement. They were pricing in 6.7%. Gets his listeners. They delivered 2.1%. So sounds like maybe I was a little optimistic. I mentioned that. I said this is probably not the case, but I was hoping that maybe we had hit that inflection point where they had crushed the individual name vol in terms of earnings so much that we were going to go out the other side now. And yet not so much. Let's see if we have any others out here that are kind of interesting on the results report. Facebook, 272.14. That's where they were going into their announcement. They were pricing in 7.3%. Get this, listeners. They delivered 0.6%. So this is Annihilation City from an earnings vol perspective. So far, 2021 from an earnings perspective playing out a whole heck of a lot like 2020. All right, let's go real quick into some odd block madness. Then we'll open up the floodgates to you folks in the mail block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's see if we can distract you from GameStop madness for a few minutes. Let's go back. We've been amassing quite a catalog of trades to track and trades to come back to. So we're going to do that right now. We're going to burn through a couple of these, listeners, so we can get them off our books and see how they perform. Then it makes the Rock Lobster happy, too. He likes to check in on these names. So first off, we're going to dial our Wayback Machine all the way back to December 28th, right at the end of last year. At the time, we reviewed what looked like a call overwrite in Global Payments, Inc., ticker symbol GPN. At the time, the stock was trading 208.15, and we had paper coming in selling almost 10,000, 9,705 of the Jan 220s on the bid for $1.30. That was a 27.5 vol, if you're wondering. There were earnings, but not in this cycle. They're coming on February 11th, so earnings not in the lifespan of that option. And looks like this one worked out. Let's see. The stock closed at 191.38, so it seemed like our friend there calling maybe a near-term top around the 220 strike. Never even got close to it, really. So the Jan 220 calls were still open and worthless on expiration. So it seems like, Mr. Rock Lobster, we're 1 for 1 here. Looks like our friend pocketed about $1.2 million. Is that your takeaway as well? Or do you think maybe they got a hell of an execution and they bought these and they're crying all the way to the bank, sir? Or crying all the way to maybe their mom's basement again because they can't afford their own house anymore. Maybe our listeners disagree, but don't you think if you're living in your mom's basement that this is a pretty sized trade for living in your basement? Hey, you don't have to pay rent or a mortgage, so you sling it on GPN. Why not?
You just whack it out. So what I would say is, looking at how this was priced, I thought this more, they sell the calls and then, so I think they're okay. I mean, I think just standard right, vol high, sell calls, make money, go on and win another day. So that's kind of what I view on that one. So I think they're gonna pocket the money. They own the stock and they just don't care if it gets back up there.
There you go. 1 for 1. Let's see if we can keep this train going. Now we're going back to December 21st to what looks like Mr. Rock Lobster's favorite strategy, the line in the sand put on Amicus Therapeutics. At the time, we profiled a 15,000 lot, 15,050 to be precise, of the Jan 20 puts going up for 23 cents. These things were 20 cents at 60, so not that hard to intuit what they were up to on these bad boys. The stock was almost $24 when these went up, so the trade was about 16% out of the money. Next earnings are March 1st, so no earnings in this cycle. And the stock closed at $21.84. So they sold the 20 puts, looks like they were pretty happy. And that's indeed what happened. These puts were still open on expiration. They went out worthless. And this customer made a cool, looks like Mr. Rock Lobster, about $350K. Is that your takeaway as well? Or are you going to be Mr. Diehard Cynical on this one?
Me, diehard cynical. I don't know where you get that kind of talk. Again, this is this isn't a bad one. 15,000, 23 cents, 15,000 times. That's not bad. So again, line in the sand. Is this another winner?
Does seem to be. I don't think we profiled a line in the sand put that has lost yet, sir.
Right. So one thing I tell my students, if you want to live selling puts, only sell puts in stocks you can afford to buy or want to buy. Because that's the whole idea of the market, right? Sell low, buy low, sell high. So, you trade your puts well below market prices, and then you go sell right your calls against your stock above and, try to make some money. So again, this is a line in the sand. They're usually, they pick spots that are very hard to get to or that they want to get to. And I think that's what we got here.
That's what we got here. 2 for 2. Let's see if our third one can fall into that same category. We're going back to December 17th for this one, listeners. This one's a little bit different. We don't talk about a lot of put love here on the show, aka put buying, but it seems like that's what we had back on the 17th. We profiled 4,986 of the December, expiring on the 24th, so still end of last year. 18 puts going up for 30 cents, lifting the offer on these bad boys. The stock was 2014 at the time, so these puts were still a little bit out of the money. Let's see. There were earnings actually the day this trade went up. So this was an earnings day play. And looks like the stock closed at 1778. So a little bit shy of his strike on expiration. Seems like this guy or gal, they didn't wait around too long. Looks like they closed out most of this trade about 5 days later on the 22nd for prices ranging from about 36 cents to about 42 cents. That's when the stock was around 18. So you might say, whoa, the stock gapped down from about 20 to 18. It moved in his favor. That's great. He should have made a lot of money. But as you can see, he really didn't. He made about 6 cents to about 12 cents, depending on which chunk. He sold them out in a couple of different chunks, which chunk you're looking at. So the stock dropped about $2, but not really the profitable bonanza you might think, because again, he was trading on earnings, and we've said this before, we'll say it again, earnings, barring some sort of strange complication or unexpected surprise, that vol's coming out pretty aggressively. So if you're buying premium on earnings day, you need to have a major move to pay for that. He got a decent move, but not fast enough and not aggressive enough to make it pay off. So he made money. Don't get me wrong. He did all right. So I guess we're technically 3 for 3 here, Mr. Rocklop. So it's like he made somewhere in the ballpark of 30 to 40 grand, which again, not bad. He outlaid about $1.50 to make that. So not terrible, but it's by no means the mega paloozas of the other ones we saw with about 350 or over $1 million. So Mr. Rock Lobster, is that your takeaway as well? Buying premium on earnings day, a dangerous road to travel down, sir?
Well, it is kind of is that taking your dice and throwing it in and seeing what you get. So I'd say yes, it is a little bit dangerous, and but still, I think they made a little money buying those puts. I mean, what are you going to do? They made a little bit, but it's always a bummer to have the stock do what you want and you don't make any money. But sometimes that happens with options.
That is the worst case scenario. Just see yesterday, which we were just talking about earlier. Sometimes stock moves your way and still doesn't always work out in your favor. But we know it always works out in our favor. It's your question. So let's get to them. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's get to it. Let's talk a little bit. I said we're not done with GameStop. We're going to go back to it right now. There actually were some calls from some outlets that you might actually give some credence to yesterday that, hey, the way the options market is pricing out of the money calls is structurally incorrect. These calls need to be structurally higher. That's a term we heard repeated several times because, and just to reflect for the fact that they, in the opinions of these folks, clearly not accounting for the absurd upside explosion potential that we all saw play out in a handful of names yesterday. So we thought we'd turn that spotlight upon you. We said, hey, this GameStop frenzy, it's shaking the options world to its core. Some people are actually suggesting out-of-the-money calls should be priced much higher going forward to account for these disruptions. Do you agree? Gave you 3 choices. Yes, this changes everything. No, this is the joke. Or what the heck is happening? Uncle Mike, we'll start with you. What is your vote if you have one? I think I know what it is. And then B, more importantly, what do you think our audience is voting for, sir?
Well, I always think an out-of-the-money call should be priced more because who wouldn't want to buy an out-of-the-money call on anything, is my opinion.
Then you could sell it to them. So I think you would be happy if they did that.
Exactly. No, I mean, the options market is what it is. There's it's oftentimes it's right, and when it's wrong, then that's your opportunity as a trader to take advantage of the option market being wrong. So I think that the audience is going to think that the calls are overpriced, that the calls need to be priced higher. And I think I'm going to say that I think I think the option market needs to price them higher as well.
Really? So you're voting for yes, this changes everything. Are you talking your book? Do you want to sell more pricey covered calls, sir? Is that what you're talking up here?
There you go. Well, and I can assure you that in GameStop, I have absolutely, I not now, nor have I ever had any position in GameStop.
There you go. Disclosure for all you out there. Mr. Rock Lobster, what are your thoughts? Do we need to add a little addendum to Black-Scholes that has all the other elements and then plus X% if it's an out-of-the-money covered call, sir?
Well, I think the whole idea of, of course, we've built an entire business on Option Pit. That Black-Scholes has a lot of assumptions. And the whole idea of skewing options is because you're kind of changing the Black-Scholes assumption that go into the model. Because, as you know, Black-Scholes just has one vol. And clearly, when you look at, let's say, the strikes of, I guess the only stock that has one vol now would be GameStop, and they're all 1,000. So I guess Black-Scholes is right in that case. But yeah, I think the skew is in there, and the skew's in there when it needs to be in there. Right now, look at Apple. Apple has a pretty significant bid to the upside after earnings. I don't know where they think the stock is going to go, but the curve is up there. So do whatever you want. But for people that like to write options, they're getting nicer, juicier premiums. So what the heck? It's going to make them happy. So I think that the liquidity provider community definitely can jack those vols up, but ultimately when a stock goes up like a jillion %, there's no price you can make the skew high enough because it won't matter.
Yes. So yeah, this is patently absurd, but hey, it would be interesting. I wouldn't be averse to seeing a little bit of extra juice. All of our covered call writers in our audience get paid a little more. I think they wouldn't mind that. The market makers would be choking down a lot more calls. So there we go. I think eventually, if you told them they had to stand there and keep a certain premium built into those calls, regardless of what else was happening in there, they may have a little bit of a revolt on their hands. And it looks like you listeners are, like I thought, you guys are fading this. No, this is a joke, winning with 73.6% of the vote. Yes, this changes everything, a.k.a. the Uncle Mike answer, 16.8%. And what the heck is happening? 9.6%. You guys got a little time left. Get on over there. Add options to make your voice heard. Mr. Rock Lobster. I love our audience. They're a savvy bunch. And we got Mr. Tony here. It's Tony Weber. He's a live listener. Quite frequently, I should say. He's in there, it looks like, again today. He sent in something. We were just talking, Mr. Rock Lobster. In fact, you said earlier in the show that, these spreads you're seeing out there are mostly nonsense. And I concur with you. They are mostly nonsense. However, it seems like occasionally you can get some funky fills. And Tony sent in evidence. I have no reason to doubt his screenshot here of, let's just say, I'll keep the strikes secret to protect the anonymity of his trade. But let's just say he put on a far out of the money put spread, pretty tight in GameStop, and then took it off. And looks like he bought it for a few cents, and then he sold it for a few cents. And it looks like, according to this screenshot, Mr. Rock Lobster, thanks to the madness of absurd strikes, absurd quotes, and everything else in crazy wide markets, it looks like he bought it back for a 1 cent credit, sir. Are you saying the same thing? What do you say to that, Mr. Rock Lobster?
The only thing I could think somehow is there was a resting order that somebody didn't trade, which is entirely possible. I don't see how the electronic systems they have right now that he could do it. I believe that somehow it happened, but it must have. The only way I can think of it is just there had to be some sort of resting. There had to be a resting order there where he was able. So he was able to what? Squeak a penny. So he did all that for 2 cents.
Well, it's not the amount so much. It's just the fact that it exists. It's kind of like it's like the white elephant out there.
I myself, I am agog and aghast, and I can't believe that it actually happened. But apparently it did. I can be corrected. I'm not the end all be all, but maybe you had a potential like mini system shutdown from some of these guys, which certainly could have happened, right?
That certainly, we did see other shutdowns out there. So we doff our caps to you, Mr. Weber. Well done out there. Getting paid to buy stuff is always nice, regardless of what the black-hearted rock lobster says about it being small size. Well, it's all impressive nonetheless. Buying things, to get paid to buy things, it's always nice. All right, let's move on. Another frequenter here. My boy Luigi. He says, I heard the meatball on a recent YouTube video. He talked about a gamma squeeze and a short squeeze. Could you help me understand it better? Yeah, Luigi, we just did a huge 1-hour hit on this yesterday on Options Bootcamp entitled Everything You Always Wanted to Know About Short Squeezes But Were Afraid to Ask. And in that episode, I kind of mentioned that the GameStop situation was kind of the perfect storm, which is why this name amongst all the others really just dramatically outperformed to the upside. Obviously, it was the most shorted name on the planet. It's a good starting point for something like this. You have a pretty motivated base of retail folks out there. You had a stock that at the time was fairly cheap. When all this started, it was still around $18, $19. You could come in and buy a round lot for $1,900. That's even small retail accounts can usually afford to do that. So an enormous message board like that, even if a small fraction of the participants actually participated, which we all know most of these message boards, 99% of the people are lurkers out there. But even if a small fraction did that, that's still many, many millions, tens of millions of shares changing hand. All of the float is only 50 million in GameStop, so it doesn't take much to bump it up. And once you start bumping it up, we know we have those aggressive shorts. They're out there trumpeting their book and doing webinars about how short they are. So we knew they existed. Those folks knew they existed. They knew if they bumped it up a little bit, you get a little bit of extra juice kicking in. And then, of course, the gamma squeeze component comes in when everyone on them other was also buying those very cheap, out-of-the-money weekly calls in GameStop. Remember, this all started kicking off on the 11th. It went right into expiration on the 15th. So you had people buying crazy short-term weeklies where the gamma is just exploding against the market makers who are selling these things. Remember, of course, market makers, they don't want your directional risk. They want to hedge that away. So they're buying these things to keep their position delta neutral. They're buying the stock, I should say. And so that all kind of fed fuel to this conflagration. You had people buying the stock en masse. You had people buying small, short-dated, out-of-the-money options en masse. But in large numbers, that all aggregates up. The market makers, they weren't buying a lot of calls those days. They were mostly selling them. So that's all going to kick in to kind of add fuel to the fire, which is why this thing became this roaring inferno. Then we saw all these other things happening, celebrities getting involved. And then it kind of got even beyond the realm of any sort of rationality. But in the early days, that's why this thing really started ratcheting up to 11 pretty quick, is because it had that kind of perfect storm. All these other ingredients were kind of lurking around. It was just kindling, waiting to ignite. That's why you've seen percentage-wise nice runs, but nowhere near in the other names what we've seen in GameStop, because it had that number of factors lurking around that really set it up. Mr. Meatball, or I should say Mr. Rockloff, so he's talking about the Meatballs video. Are you familiar with it? You have anything to add about gamma and short squeezes, sir?
No, I just, but we've been teaching our students about, active, we'll just call like active gamma for SPX. There's a lot of ways to trade that. But it's not a surprise to us because that was like a bread and butter trade. Through trading butterflies and stuff. So I would say yes. It's interesting as far as GME, where there's more shorts. It's how much stock is around, and then what they actually can. So I thought my understanding from the Reg Show days or the new rules is that they can't short stock unless it's located. So I don't know where the numbers are coming from, because for everybody that's holding a short position for somebody, they have to have stock located. So somehow maybe people are, I don't know, they're lending out shares to two people. I didn't know that was possible to do. But it's an odd, I would say at best, it's an odd situation. So, and the SEC will get all over that because they can track all of that. And they're going to be looking at this with a fine-tooth comb. So if somebody was in violation, there's going to be huge fines laid down on somebody for that.
Yellen's already said she's on it. Yellen's on the case. She's ready to go. So this is going to be, she's got the bit in her teeth on this one. I think a lot of them do. So yeah, we have not heard the last of this. Speaking of not hearing the last, before we roll into Around the Block, Tony Weber chimed in again. He says, yes, it was a resting order he got filled on, and he made $24. So there you go, Mr. Rock Lobster. Nana, nana, boo-boo to you. $24 he didn't have before.
What's amazing is that the liquidity provider would not hit the resting order. So can you imagine how their systems are set up? They're like, we don't want $24 because it doesn't matter to us. We're not selling any contracts for any reason at all, which is possibly how they have things set up.
Yeah. Not many bullets left in the chamber. When the chamber is clicking empty over and over again, you can't there's no way to reload. Hence the gamma squeeze I was talking about earlier. Listeners, all right, let's keep on rolling. It is time to go Around the Block. Don't worry if you got more questions about all this madness. Stay tuned. We'll be back in Twyfo in a little bit. And well, I think we'll have more to say on this and Russell 2000 as well, all this kind of craziness. So don't worry. There's more to come as we head around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, you can't see, listeners, but while we were chatting there, Uncle Mike was busy loading up on GameStop over there. So, Uncle Mike, now that you're loaded up and supremely bullish on GameStop on behalf of all your clients, including the retirees, what else is on your radar? What are you watching for the rest of the week until our next show, sir?
All right, it's my new 80-plus trade. If you're 80 years or older, I'm going to fill your account with as many out-of-the-money GameStop calls as I possibly can. Just kidding, regulators, in case you're listening. I never thought I'd say this, but I think I am actually watching GameStop again, just to kind of see where it goes. Seeing how the bonds react. So what the Fed said yesterday, we actually did have the Fed talking yesterday. We didn't even mention it on this show, but seeing how markets react to that, and that looks like interest, nothing really earth-shattering as to what they were saying. So watching the reactions for that, as well as just watching to see if we are 40 points away from an all-time high again. So we'll see how the market treats the rest of the day today and tomorrow.
Yeah, we had Fed yesterday. We had Apple, Facebook, Tesla. Nobody gave a crap about any of it. It was all GameStop all the time. What a world we are living in, listeners. All right, Mr. Rock Lobster, sir, what are you keeping an eye on until maybe, who knows, maybe you'll be on Vol Views tomorrow or until our next show on Monday, sir?
Yeah, just saying where this, so all of a sudden 21 is no longer, we were just trading in the 21 handle in VIX and it's gone again. So again, for I'm going to say the 8th or 9th time since COVID started, the 21 handle is the kryptonite that VIX bounces off of like a rubber ball. Okay, just can't get close to it for too long. So, and for at least this time, I had something to sell when we went up. So even though my vol puts died, I at least got out of it for a scratch, thankfully, for once. And we'll see what happens if it can make the trip down. But, if I would say now that if vol comes in, it's going to probably end up coming in relatively slowly just because of the aftermath of the GameStop. So I'm not quite sure it's over yet, but we'll see. But, and big tech did make some money, but the stocks aren't moving on earnings because they're already at all-time highs, crazy valuation. So we'll see what happens if people want to jump in and, why buy Facebook when GameStop is going up $100 a day? So I think we're still kind of stuck with that for a little bit.
Why buy Facebook when GameStop is going up $100 a day? Who ever thought that sentence would even be possible, let alone something we would say here on the show? But that's how we stand here. And it's only January, listeners. Who knows what's afoot? We thought 2021 was going to be the calm, the sane year, the quiet, tranquil, perhaps younger sibling to 2020. But so far, at least, not so much. 2021's got its own share of surprises in store for us. And you know what else we have in store for you, listeners? Is more great content. If you listen in live, we'll pump some fun stuff in there. Maybe Mr. Overby, he talks a little GameStop, but he mostly gets into some Google stip strikes in there. And we'll be back in about half an hour exactly to talk all things TWIFO. I got a feeling small caps and these crazy names are going to make it in there. We got Mr. Matt from ORATS joining us. Should be fun. And, of course, we'll be back later on. Before we do that, let's go back around the horn. Mr. Uncle Mike, if folks want to buy some GameStop, where should they go? What should they do?
Well, don't call me if you want GameStop, quite honestly. But if you are looking to do some investment-style option trading in some way, shape, or form, or you want a financial advisor who just is not afraid to delve in the option world, along with stocks and ETFs and that type of thing, feel free to contact me. My website is stcharleswealth.com, and all my information is there. Or you can like me on Facebook. I have a Facebook page as well.
You're on Facebook now. We just got to get you on Twitter, and then we could actually tweet about you during the show. Actually get you some followers, sir. You got to get your compliance moving on the old Twitter. And only grandmas use Facebook.
We are actually very close with Twitter. I think that within the next couple months, I might be making my big Twitter announcement. I think I might be finally twisting the arm enough of my compliance that might actually happen. Wow.
So we can actually tweet something other than hashtag Uncle Mike for a change. That'll be nice. Oh, that'll be good. Looking forward to that. And Mr. Rocklop, so you have a Twitter. It's at OptionVol. If anyone wants to check it out, we tweet it out during the show. If folks want to tweet at you, or maybe they want to check out what you have cooking, Mr. Rocklop, so where should they go? What should they do?
Take a run over to optionpit.com. Look at Mark's very timely Robinhood indicator. I have to say, it has produced some crazy freaking trades. But our subscribers are happy because they're letting Mark do all the hard work and just trying to identify stocks that people are buying into. Pure momentum stuff built by we now have a tech group inside Option Pit, growing by leaps and bounds. So if you're interested in that kind of, I would just say trading, it's a trade, okay? Not nest egg stuff, but a trade. It's done pretty darn good. And hop on over. So hop on over to optionpit.com and look up Robinhood in our memberships area, or you can do your vol stuff with me. Good old-fashioned mentoring and investing with options as well. We do all of it at Option,
including buying GameStop. So if you want to buy some GameStop, hit them up at optionpit.com is the place to go. On behalf of the rockingest of lobsters and the uncleest of Mikes, we'll see you back here for this show on Monday. Of course, we'll see you back here tomorrow for Volatility Views, noon Central, 1 p.m. Eastern. And if you're listening right now, we'll see you back here in about half an hour to talk TWIFO. And otherwise, have a great weekend, buddy. Stay sane, stay safe. And we'll see you back on Monday for another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.